Hi guys, and welcome to our podcast. Today we're going to discuss about robo-advisors. What exactly are they? What are the benefits, and what are the different options we have as investors? If you were an investor in the past, you didn't have many options where to get help. You could venture out on your own and adopt a do-it-yourself approach. If you have the money, you could hire a financial investment advisor who can give you a professional opinion. Today, another option is available. There is the availability of the so-called robo-advisors. This answers the need for a low-cost financial and investment planning advice for younger and newer investors. These investors want to invest on their own, but don't want to pay for the high cost of experts. So what exactly are robo-advisors? Robo-advisors are a kind of financial advisors that provide online financial advice or portfolio with minimal human intervention. They became popular when people began searching for inexpensive but convenient automated opportunities. Within minutes, robo-advisors can help you set up a diverse but customized portfolio right in the comfort of your desk. They can also give you access to services once reserved for the ultra-wealthy investors. You can now get your own financial planner or create tax loss harvesting strategies. These, and so much more, are attracting investors to make use of robo-advisors. According to a July 2017 report in the Business Insider, robo-advisors will be managing around $4.6 trillion by 2022. By now, there's a long list of robo-advisors on the internet as new ones are entering the market. Meanwhile, the veteran robo-advisors are still churning out new offerings. So, given a wide array of choices, how do you filter through the field to find the best robo-advisor for you? Finding the best robo-advisors for you will depend on your financial situation and needs. However, top robo-advisors have three top features: low fees, low initial investment, and a comprehensive portfolio management service. You can use these three items as a basis for making your decision and hiring a robo-advisor. Robo-Advisor Benefits have a couple of good benefits that can help investors to get the right decisions. Robo-advisors use algorithms to make thousands of calculations to come up with the optimum allocation of assets in your portfolio. They base these mathematical formulas on established investment principles found in resources like modern portfolio theory and efficient market hypothesis. They then use your answers to their own questionnaire to determine what level of risk you want. After that, their system will generate an appropriate mix of investments. More people are using robo-advisors now because they're easy to use, they're inexpensive, and helpful to new investors. First, robo-advisors cut your costs. A robo-advisor is an alternative to traditional human financial advisors. Online platforms offer the same services as traditional advisors, but without much human intervention. This system allows them to bring down the cost of the service to a fraction of the traditional costs. The going rate for robo-advisors is a flat fee of 0.2% to 0.5% of the client's total account balance. This is significantly lower than the typical 1% to 2% charged by human financial planners. Commission-based advisors will even charge more. Second, robo-advisors' returns are, and most of the time, better than human returns. Automated financial advisors can give investors better returns for their money. This is because they don't have to surpass the initial 1 to 2% fee that most human financial advisors collect. In order to surpass that fee, your investment must really do exceedingly well in a short time. However, studies show that investing in index funds will produce better results for investors in the long run. Most robo-advisors will normally advise you to invest in them. Another advantage is their accessibility. Compared to human advisors, robo-advisors are generally more accessible. They are there for you 24/7, generally. The only thing that will keep you apart is the unavailability of an internet connection. Moreover, you need less amount of money to get started. In traditional human advisors, you need an average of $5,000 as a minimum amount to register your account. Most of the robo-advisor sites have a very low minimum amount requirement. Betterment, a popular robo-advisor site, has no account minimum whatsoever. Normally, human advisors will require you to have at least $100,000 in investable funds before they take you in. Some of the more well-known and established firms even ask for more. They prefer to offer their services to high net worth individuals with a variety of wealth management needs. These are the guys who can afford to hire them. These online platforms are also so much more efficient. Before, executing a trade involved a lot of tiresome activities. You would have to call or see your financial advisor, explain your decision, fill up some papers, and wait. Now, with your Robo-Advisor account, you can do all of these things with a click of several buttons right at home. Plus, they carry out your transaction much faster. Robo-Advisors execute advanced instructions automatically and can combine multiple strategies simultaneously. Robo-Advisors may not be the cheapest service to employ, but they are probably the easiest to use. One of their best advantages is that there is no need for voluminous interactions with you. You can set an automated monthly investment amount, and the service will automatically invest for you. It will also regularly rebalance your account and can even help you optimize your tax savings through tax loss harvesting. You may save some money going DIY, but it's not going to be easier than getting a robo-advisor. The last advantage, which can be a disadvantage as well, robo-advisors are available for everybody. Well, technically, everyone can hire a robo-advisor. The most distinctive feature of a robo-advisor is its ease of use and access online. However, digital platforms normally attract and focus on a certain demographic and not the whole universe. For robo-advisors, these are Millennial and Generation X investors who are technology savvy and in the process of wealth accumulation. This population is comfortable sharing personal data online and has no trouble entrusting important tasks to technology. That would even include banking and investment management. However, as the industry continues to improve, robo-advisors are now attracting baby boomers and high net worth individuals as well. Recent research by Hearts and Wallets revealed that a moderate number of the older generation is going high-tech. Half of investors aged 53 to 64 and 1/3 of retirees use digital resources to help manage their finances. We have a review of the top 5 robo-advisors in the market right now. The first one is Betterment. Betterment LLC is one giant of a robo-advisor. It has around $7.36 billion in assets under management, making it the biggest robo-advisor in the industry. In July of 2016, it made financial history by breaching the $5 billion AUM mark. It is the first independent robo-advisor to do so. Betterment trades through Apex Clearing Corporation, just like their main competitor Wealthfront. Betterment takes a passive approach to investing and uses proven investing strategies and technology to make it efficient. Another famous robo-advisors company is Wealthfront. Wealthfront is another giant in the industry with $5.5 billion AUM at the end of March 2017. They also advocate passive investing. They will build you a personal diversified portfolio composed of low-cost index funds. It will, of course, depend on your risk tolerance. Wealthfront also uses Apex Clearing Corporation and makes investments based on modern portfolio theory. Vanguard Personal Advisor Services is considered as a popular choice. Vanguard Personal Advisor Services is the robo-advisor unit of Save Vanguard. Save Vanguard has been in existence since the 70s as a personal financial advisor. It is the respected leader in low-cost investing options for DIY with their low-cost index funds. With the creation of the Robo-Advisor arm, the firm offers now a mix of financial advice and robo-advisor technology. The fourth choice is Schwab Intelligent Portfolios. Schwab Intelligent Portfolios' zero-free structure has been drawing investors. This is because Schwab has waived their account fees and commissions. They earn from management fees from Schwab ETFs and choice third-party ETFs. Although Schwab's account may be free, they charge the highest minimum balance to open an account. The $5,000 minimum is the highest among the top robo-advisors mentioned in this list. Last but not least is Wise Banyan. Wise Banyan Save began its operations in February 2013 and is one of the more inexpensive robo-advisors today. They do not charge management fees for their service because they believe that technology has made the work easier. That is definitely good for investors. However, they also offer some services for a fee. Summary. The arrival of robo-advisors has broken down the wall between the financial services industry and the average investors. These online platforms made financial planning accessible to everyone and not just to high net worth individuals. Many people still have doubts about the viability of robo-advisors to provide all solutions to wealth management. They also point out that the technology is relatively new and they mostly execute transactions without human intervention. Critics also highlight the lack of empathy in class, something that human advisors often manifest. They claim that they are only good as an entry tool for starter investors with small accounts and limited experience. To them, robo-advisors are not adequate for complex, advanced financial planning, such as estate and tax planning or trust management. Automated algorithms do not react appropriately to unexpected problems or extraordinary events. For example, if a young person receives a substantial inheritance, a robo-advisor may not be the practical option. That's it for now. On our website, you can find more posts and podcasts, as well as calculators and other financial tools. I hope you enjoyed it, and don't forget to subscribe to our podcast channel on YouTube. Do you use robo-advisors? If so, we would love to know your thoughts, so feel free to share them in the comments below.